Bank meltdowns shake Wall Street. Which stock are analysts recommending now? Stay tuned. Hey everyone, welcome back to our channel. Today's video covers Wall Street analysts' latest moves as they try to make some big calls on stocks that have been impacted by the recent Silicon Valley Bank and Signature Bank meltdowns. The collapse of these banks has been quite significant, with regulators stepping in to backstop depositors to prevent a wider financial crisis. However, regional bank stocks, such as First Republic and Western Alliance Bancorp, have seen a steep decline, while even big names like JP Morgan and Charles Schwab have not been immune. In this video, we'll take a look at some of the interesting bullish calls that analysts have made amid this frenzied day for investors. The failure of Silicon Valley Bank and Signature Bank has led Wall Street analysts to rework their ratings on bank stocks. Despite regulators stepping in to backstop depositors of the banks, regional bank stocks such as First Republic and Western Alliance Bancorp fell by 65% and 61%, respectively. Some analysts, however, have made bullish calls on bank stocks. JP Morgan says buy on First Republic Bank, while Wells Fargo upgraded its rating on JP Morgan to overweight, and Citi upgraded its rating on Charles Schwab to buy from neutral. Analysts are reshuffling their ratings amid the rapid developments in the banking sector, with the U.S. Federal Reserve announcing the new Bank Term Funding Program to help banks avoid selling securities at a loss. Key points. Regulators stepped in to backstop depositors of Silicon Valley Bank and Signature Bank to prevent a wider financial system crisis. Despite this, regional bank stocks such as First Republic and Western Alliance Bancorp fell sharply. Some analysts have made bullish calls on bank stocks such as First Republic, JP Morgan, and Charles Schwab. JP Morgan was upgraded to overweight by Wells Fargo, which cited the bank's fortress balance sheet. Citi upgraded its rating on Charles Schwab to buy from neutral. The U.S. Federal Reserve announced the new Bank Term Funding Program to help banks avoid selling securities at a loss. Analysts are reshuffling their ratings on bank stocks. First Republic stock absorbed a double downgrade at Raymond James. PNC Financial Services Group is also in the rating spotlight. Analysts are pondering the impact of lower deposits at First Republic. The new Bank Term Funding Program has minimized the risk that other banks could be forced to sell securities at losses. JP Morgan says First Republic continues to enhance its liquidity position and serve client needs. JP Morgan has gained meaningful market share in each of its business lines. Citi believes there is a compelling entry point into Charles Schwab stock. Charles Schwab has deposit protection up to $750,000 given 3 bank charters. And that's it for today's video. As always, thanks for tuning in, and we'll see you in the next one. If you enjoyed this content, make sure to hit the like and subscribe buttons and leave a comment down below with your thoughts. Disclaimer: the information provided in our financial YouTube channel is for educational and informational purposes only. It should not be considered as professional financial advice. Any investments made based on information presented in our videos are at your own risk. Please consult with a qualified financial advisor before making any investment decisions. We are not responsible for any losses or damages resulting from your use of the information provided in our channel. Thank you for watching.